Tesla ended the day down about 1.5%, and you're going to see that the BX trender, which is this indicator at the bottom of your screen, is still showing red. When this BX trender flips from green to red, this is normally an indication that the stock is either going to sell off or at least consolidate sideways until more buyers can step in to push the stock up further. You'll see when this occurred back here on the 1st of October, price pulled back 16% within 14 days. From there, it flipped back to green, price consolidated for multiple sessions before eventually breaking out about 21%. BX flips red once again, price compresses into the market bias, which is normally going to be the lowest the big money is going to take the stock before buying it back up. Price flips back green on the BX trender once again, and we get a massive breakout. And this most recent flip from green back to red has been why we have been bearish short term on Tesla. I'm still holding my 2027 calls, but just looking at the buying pressure and how far away we are from the market bias, we know that there's just not enough buying coming in to push the stock higher. And on top of that, we also know that if we're buying this far away from the market bias, and at minimum, we're not getting a discount. This is why in most cases, price will pull back into the market bias before finding a potential support to see if institutional investors are going to step in and save the trend. Now, if we zoom out to the weekly chart, you will notice that price has bounced off of this market bias multiple times, and this level has basically been the reload area for all of the institutional investors. This is why we became bullish again back in August when Tesla pulled back into that market bias. We saw this initial bounce and then the eventual flip on the BX trender. Price once again pulled back to test that support level and then bounced, moving back up to $360. Even though the weekly chart is very far from the market bias, you have to keep into account the fact that the BX trender is still showing strength. So we could have a situation like SoFi on our hands where price just continues to break out month over month, week over week, even though we are very far from the market bias. And this is why I love the indicator, the BX trender, so much, because it really helps us to stay in those breakouts long enough to see a massive return instead of getting cut out of the position early. Now, the final thing I want to show you, which we went over a couple days ago, is the monthly chart for Tesla. The monthly chart is still showing massive bullish accumulation, showing that buyers are still stepping in, which is exactly what we want. We've also noticed here that price bounced off of this support zone. And since the flip has pushed through this resistance level and price is now moving up into this $330 range, the market bias is now turning green once again. And so there's a very good chance that we could have another one of these breakouts on our hands over the next 12 to 18 months, which is why my stance on Tesla still remains so bullish. As long as the monthly chart continues to show higher highs, I will continue to hold my 2027 calls. If you want to learn how to use this indicator, it's completely free. The link will be in the description to my course going over how we use this within our trading strategy. I also have courses going over exact entry and exit requirements to show you guys how we've been able to make nearly $4 million this year, or close to a 200% return on capital. The link to the BX course and all of our courses will be down in the description. All of our courses are free. As always, guys, thank you for all the support, and I hope you have a great holiday.